Jim Rogers, an even worse catastrophe is coming. The commodities king who made his fortune in the 1970s with globalist hedge fund manager George Soros, Jim Rogers now is saying that a worse catastrophe is coming than 2008. Let's read a little bit of what's in the CNBC article, or CNBS article. Jim Rogers has a two-word message for U.S. investors. Be careful. The U.S. is the largest debtor nation in the history of the world, he told CNBC. We may well have a big rally in the U.S. stock market, but it's not based on reality. I would encourage investors to know you're in a fool's paradise. Be careful, and when people start singing praises, say, I've been to this party before, I know it's time to leave. End of quote. Let's go on later into this paragraph, or later into this article. Zoom in if you can't see. First of all, throughout American history, we've always had slowdowns every 4 to 6 years. That means that sometime in the next couple of years, 3 years maximum, we are going to have problems again, caused by whatever reason, Rogers said. For instance, there was 2001, 2002, and then 2007, 2009 was much worse. Well, the next time it's going to be worse still because the level of debt is so much higher. Every country is increasing its debt at the same time. And then he goes on. I'm going to start here. This is the first time in recorded history that we have every major central bank in the world printing money. So the world is floating on an artificial sea of liquidity. Well, the artificial sea is going to disappear someday, and when it does, the catastrophe will be even worse. Yes, it's coming, Rogers reiterated, adding, if I was smart enough to tell you when it's going to happen, I would get rich. And then the article goes on, and last part of the paragraph, or last part of the article. If the market doubles in the next 6 or 8 months, which it's done in the past, then I would have to start thinking about selling short, Rogers said. But until then, because of the uncertainty, at least in my mind, I'm not doing anything. End of quote. Alright, so Jim Rogers, Commodities King, is saying, be careful. Words of wisdom from an expert who's made millions and even billions of dollars in the marketplace. So here's my analysis on what Rogers is saying. I noted that right now, this period reminds me of what happened in 2007, 2008, right? You had the market high in October of 2007. But what happened before October of 2007? What happened in August? Well, you had the LIBOR OIS spreads blow out. There was stress in the credit conditions or in the credit markets in August of that year. You had subprime blowing up. And because of the Federal Reserve's actions, they delayed what was going to happen in the next year, which was the crash of Lehman Brothers, the crash of the whole financial system. And it was, number one, or a red flag was shown in August of 2007. And then you had problems in some banks in Europe as well during that time. I think it was Northern Rock, if I remember the name correctly. So if you're looking at all of that, tying back to what happened right now, what happened in August of this year, or it must have been the summer of this year, you had the Chinese SHIBOR rates pop up, right? Credit conditions starting to worsen there. And now you have a stock market which is overinflated, just like it was in 2007, 2008, especially 2007 when the Dow was at 14,100 about. And the Dow peaked at 15,500 twice this year. And if you have all this liquidity in the marketplace, and in addition you have higher oil prices, or you have high oil prices right now, I think it's around $103, $104 a barrel. And if you see another event in the Mideast, or if you see more liquidity measures set forth by the Federal Reserve after this debt ceiling fiasco is taken care of, then oil prices, in my opinion, are going to go higher. You have higher oil prices, what will that do to the American consumer? It's going to hurt them, right? You see these lousy numbers, I think came from ADP today. I mean, the unemployment situation is not drastically improving. You have a lot of people coming out of the labor force. So, as Jim Rogers says, that yeah, you may have 1 year, 2 year, 3 years max before this next bubble may pop, or you have a stock market bubble. And this is all artificial. I see some of these guys on YouTube, right? They used to be huge gold and silver bugs, and now they're starting to go after guys like Rogers and all these guys in the marketplace who've made millions and even billions of dollars. I mean, these guys like Rogers, they know what they're talking about. They've been in the markets for a long, long time. They're 60 plus years old. So it would be wise to listen to what they're saying. You don't have to act on their actions, or you don't have to act on based on what they're saying. Once again, that's your choice, and the choice between you and your financial advisor. So I always recommend getting financial advice if you're new to this game, or even if you're experienced. Talk to your advisor. Putting that aside, I mean, Rogers has been making money for a long time, so maybe we should take his advice. Be careful, guys. Anyways, I'll probably do another interview. I'll probably do another interview this weekend, probably on Sunday night, and then probably sometime next week with Jason Barak. We were supposed to do one today, but we just had some scheduling conflicts. So anyways, I'll talk to you guys later, and if you want to add me on LinkedIn, I'll just add my LinkedIn below, and then yeah, I'll hope to talk to you soon, guys. Thanks a lot. Bye.